67 on the Nifty right now, 15,242. So this is looking an up and up kind of a market the last day of the week. In our special segment, Commodities Trade, Manisha Gupta now tells us all about crude oil prices and, tries to put together facts and figures which probably give us the way in terms of where they are headed. Listen in.
The oil and gas industry is one of the largest sectors in the world in terms of dollar value. Crucial to the global economic framework, it is also the most traded commodity in the global markets. The crude oil price's volatility has been a subject of discussion, with the oil-producing countries maintaining production cuts and on expectations of improvement in the global demand as COVID-19 vaccine is rolled out across the world. The prices have been reacting to all data and information. Since 1999, daily WTI crude oil prices have settled within 2% of the previous trading day. This has been about 70% of the time. Nearly all daily WTI price changes since that time have settled within 10% of the previous day's prices. The large price changes are relatively rare. March 2020 has had 4 days when we saw record volatility. The 25% decline on 9th of March and 24% decline on 18th of March were the two largest percentage declines in crude prices on record. So while you are looking to trade, hedge into the underlying commodity as related asset classes, let me take you through on how the oil and gas industry is broken down in 3 segments: the upstream, midstream, and the downstream companies. Upstream businesses consist of companies involved in exploration and production of oil and gas. The segment is characterized by high risk, high investment capital, as well as being technologically intensive. The midstream companies are focused on transportation. They are the ones responsible for moving the extracted raw material to refineries to process the oil and gas. Midstream companies are characterized by shipping, trucking, pipelines, and storing of the raw material. The downstream businesses are the ones where are refineries. They are companies that convert oil and gas to products for the general public, such as gasoline, jet fuel, heating oil, and asphalt. And talking about the downstream, India is the second largest refiner in Asia, and most of the consumption is in form of transport sector. And while there have been reforms to spruce up upstream sector in India, the last decade actually has seen a decline, keeping India's import dependence on crude oil to more than 80%. And with the prices rising, Indian petrol and diesel prices are currently at all-time highs. India imports and import bills have been on a rise as well, from nearly $70 billion in 2016-17 to $101 billion in 1920. Oil consumption has been on a rise as India retains its spot as the third largest consumer in the world. The IEA in its latest report has forecasted India to account for nearly 1/4 of global energy demand growth from 2019 to 2040, the largest for any country. The crude oil impacts all walks of life and all asset classes, and as data and reports suggest, even with the advent of renewables and electrical vehicles, crude demand growth is yet to peak. A big consumer like India, though, hopes that the volatility we saw in 2020 isn't repeated going ahead.
Thanks, Manisha, for that. On that note, we slip into a very short break. We'll come back with the first corporate on our show, Kiri Industry. Manish Kiri joins in next.